Good afternoon. It is Friday, September 23rd. This is Trading with Teddy. This was a big week in the markets. Gold and silver is what we're going to touch on pretty much as always. Those are the big movers. Those are the most interesting, the most polarizing, and potentially offer the most opportunity, if done right. So we had FOMC on Wednesday. This was a key event. I'm not sure that anybody expected the Fed to raise rates because we've seen the song and dance 100 times in the last 3-4 years and no action. The one thing I want to focus on though is with regards to the difference between trading ETFs and futures. And increasingly, my feeling is there's no way for me to quantify this. I'm sure if I could put data to it, they would agree with me overwhelmingly the fact that these ETF traders are more and more getting froze out of the markets. I guess what I mean by this is on Tuesday night, for example, ahead of the Bank of Japan on Wednesday and then the FOMC meeting Wednesday afternoon, traders that wanted to maybe debate or if they were on the fence on taking a position Tuesday night, they walk in the building, walk in here on Wednesday, and gold and silver have already made their move. Silver's up 50-60 cents, gold's up 15-20 bucks. The problem with this is the ETF hours, there's not 24/7 access. These markets are open with the regular equity market hours between 8:30 4:30. Okay, yeah, I know there's pre-market and aftermarket trading. Not everybody has access to that. But if you wanted to take a position, you were completely out. You're forced to go chase a market that's already way higher. Volatility's tagged onto these options, by the time you get in, and essentially it's a sucker's bet, and it just feels to me like these traders are completely cornered, and the market makers are taking full advantage of this opportunity for people that do go chase the markets on this open. Essentially, it's a gap open. There's no way to get in, so it is unbelievable to me. It's mind-blowing that people would choose ETFs knowing this. This has been around for a while, but more and more of these markets, gold and silver specifically, they make their moves in the overnight, okay? You're going to be faced with chasing it, or you may be forced in the market, meaning you can't get out, okay? When you see a big move higher, what are you going to do? Take profits? No, you can't. The market, you got to wait until the open, and by the time it opens up, you can see the market correct already. So it's such a huge disadvantage. There's no words on how mind-blowing it is to me that people continue to trade these vehicles that have limited access in 2016 when everything is so global and trades virtually 24/7. In the coming weeks, we got an option expiration on Tuesday in gold and silver. I suspect that'll be a slight mover. It feels like there's a bit of a lid on the market for now, so we'll see what the markets do into that. Ultimately, here we are in gold again, up against that trend line, coming in at 1350-ish now. So the bulls still need to see a convincing close over that level in order to see to get the next leg higher, which 1450 potentially in the cards. But again, there's so many different games being played with as much attention as the options get these days, in the volume that comes into those, and the potential opportunity for the market makers to take advantage of the quote-unquote suckers out there. So it'll be very interesting next couple of weeks. We'll see how it goes down. These are my thoughts, not those of ADM Investor Services or Archer Financial Services. Thank you.